everybody, Ignatius Jackson CPA here, CPA PFS here with a exciting video for you. So we're talking about Trump tariffs in the stock market, part 3 today. We're going to update our previous conversations about some of these tariffs in the stock market. So go ahead and stick around and learn some cool stuff. All right, be right back in a second. All right. Thanks everybody for tuning in today. Thanks for coming back. It's been about a month. We're about a month away from Liberation Day, dubbed by the Trump administration. Okay, whether or not you agree with that or not, let's talk about some of the straight math and straight numbers here, right? And so, just some of the stuff that I like to kind of get out there, as you can see from probably some of my previous videos, is that I don't buy into a lot of the rhetoric that is out there on social media and the mainstream media, etc. I like to look at my own data, my own numbers, look for things for myself, and make my own judgments. Okay. And if you look at some of the data over the past month, so April 2nd was when they announced all these crazy tariffs and things like that are out there, right? Whether or not they're crazy, who knows? But hey, they're there. So far, it seems like it's been working to a certain extent. Okay, there's been some forces that brought some people to the table from a standpoint of coming to the negotiation table. They have supposedly some contracts that are in the works here, and hopefully it all kind of pans out the way that they're expecting. Obviously, as you kind of know what's happened over the last month, ever since they made that announcement, is they pulled back on some of the tariffs, gave some exceptions, gave a 90-day pause, et cetera, et cetera, et cetera. Okay. So the stock market initially took a huge dip, but if you took advantage of that dip and bought into that dip, you're looking pretty right now, unless you bought, just one or two individual stocks. If you bought several individual stocks, then you're probably doing pretty good. Or if you bought some ETFs that rebounded, then you're doing pretty good. So we're going to go through some of the stocks that we went through the last time we talked through this and just kind of see how they're doing now. And I think you'll be pleasantly surprised that some of the stuff I mentioned in terms of not being pushed out of the market, not being afraid of the market, if you took advantage of some of those thoughts, then you're probably sitting pretty right about now. Obviously, as always, a little bit of a disclaimer here. This is not financial advice. It's not tax advice. It's not investment advice. It's not any advice whatsoever. This content that we're doing here on these channels. So the advice that we're giving here is informational and educational only. If you need any services related to any of those things, financial planning, financial advice, tax services, legal services, etc., you need to engage competent professionals to help you with that process and help you with your individual circumstances, because everybody's circumstances are always going to be different. Okay. This stuff is general in nature, doesn't work for everyone. And so we have to just make sure we disclaim some of that stuff. Okay. All right. So that said, voila, let's move into some of the content here. So let me just share my screen. All right, there we go. Okay, so as you can see in the last day, we've actually had a bit of a dip today. This is May 5th, okay? So May 2nd was actually Friday. I intended to do this Friday, but I didn't get around to it, so apologize. We're a little bit like a day behind, but almost about a month, right? Exactly a month from the Liberation Day, okay? And frankly, the big dip in the stock market happened a day after April 2nd, which was over the weekend. So, we're kind of right in that sweet spot, okay, in terms of comparisons. But let's look at this, okay? Apple, down 3% today. We got some others of these that are down 3% today. So this is the same Mag 7 group that we looked at before, including 4 Vanguard ETFs and Bitcoin, okay? So if we look at all these, for the most part, a lot of them are down today. You got these 3 at the bottom that are down, up slightly today. So let's just see how they're actually performing overall, okay? Apple, in the last month, right? It's up 10%. I thought the stock market was imploding. So, I mean, yeah, it's up 10% in the last month. On a year-to-date basis, it's still down 21%. Okay. But again, if we look and extrapolate out over 5 years, they're still up 156% over 5 years. And last year, they're up 10% in the last year. Okay. So I don't consider that to be imploding. I consider that to be a healthy, correction that's essentially happening there. Okay. And Apple, there's frankly some other forces there, if you ask me. Their sales weren't, or their financials this last quarter weren't all that great. And this was before any impact of tariffs, right? Let's see if we have some of the financial data here. So let's see, March 2025 quarterly. So they're up slightly, right? But I think people were expecting them to be up, more than that. I think they were expecting them to be doing, some pretty large numbers. They didn't quite meet expectations. And then they also talked about how the tariffs might impact them in the future. So, but that said, they are moving a lot of their production out of China for U.S. made phones or for U.S. phones. And so in the future, I don't know if they're going to really be impacted all that much from tariffs going forward once they get to moving that stuff over to India or wherever else they're going to be making stuff. So again, I think we're still okay, even though it's down, yes, 20% year to date. And the last year they were up so much that just because it's down 20% year to date, they're still up 10% for the year. So I think we're still okay for Apple. Okay. Tesla, last month, it's up 20%. All right. Now, Tesla got hit hard even before the tariff announcement because of all the hoopla around Elon Musk. Okay. And then he recently came out and said that, hey, I'm going to refocus back on Tesla starting the month of May, which we're in right now. And so Tesla, has definitely rebounded quite a bit there. All right. Year to date, it's still down 30% or 31% if you want to round up there. Okay. Last year, though, it's still up 52%. So we're still up 52% for Tesla in the last year. In the last 5 years, look at that, 413%. Okay. So the company is still doing phenomenal overall. If you zoom out. Okay. Or I guess out is this way, zoom out. So if you zoom out and, take a wider view, we're still doing perfectly fine with Tesla. Okay. Year to date, sure, not looking good, but it's rebounded from the whole Liberation Day fiasco. It's rebounded a little bit from where it was year to date previously. And then over the last year, it's still up 52%. So I think we're doing pretty good for Tesla there. Let's look at Amazon. All right. Last month, it's up 6%. Okay. Year to date, down 15%. Last year, down 1%, which isn't terrible, right? And in the last 5 years, up 57%. So Amazon is only averaging about 10% annual return. So that one's probably getting hit a little bit, right? But should it be bigger gains? I don't know. I mean, is there a lot of growth there still? I don't know, right? Looks like their financials are doing pretty good year over year. EBIT is up 21%. Okay, so these are some good numbers financially. But obviously, the concern there is they're going to get hit pretty hard with tariffs, everyone's expecting. And so what do? I don't know. But year to date, they're only down 15% technically. All right, down just slightly for the last year, 5 years. Just haven't had quite as big of a growth over the last 5 years as maybe some people were expecting or hoping, but still doing pretty good overall. Okay. NVIDIA, last month, it's up 17%. Year to date, down 15%. The last year, it's up 24%. And last 5 years, still up 13.57, right? So huge numbers in the last 5 years. So a lot of growth in NVIDIA. Perfectly fine if NVIDIA is slowing down a little bit, right? Nothing to be alarmed there. There's some data and news that, they're going to have some pretty significant hurdles with some of the AI, artificial intelligence and stuff like that that's coming out. But I mean, I think we're still doing pretty good with NVIDIA here. So 75% EBITDA increase year over year. I mean, they've always had phenomenal numbers, right? Actually, I'm sorry, that's January. They haven't come out with their March numbers yet. But I mean, it's still looking pretty good. High expectations is that they'll still do pretty good when the numbers come out here. Okay, so that's NVIDIA for you. Let's look at Meta. Up 16% in the last month. So it's rebounded. Year to date, up 2%. Okay, so Meta's not even down year to date is, I don't know, that's pretty cool, right? Last year, it's up 29%. Last 5 years is up 182%. So Meta's doing pretty good. I mean, so far year to date, they're one of the best performers out of the Mag 7. So, yeah, there you go. Microsoft, 1 month up 22%. Okay. Year to date, up 3% for last year, 5%, last 5 years, 136%. So Microsoft is supposed to be probably one of the most immune to the tariffs, yet they're not having big year-to-date increases. The last month is fairly good, but they're not having substantial growth. It doesn't really seem like in the last year. Why that is, I'm not exactly sure. I mean, the numbers are looking pretty good here for March, up 21% for this last quarter. EBITDA, 13% on the top line for revenue. So, I mean, the numbers are looking decent. So, realistically, Microsoft should probably be a little bit higher. But let's see, what are they at? P. Okay, their P is kind of high, I guess, at 34 times. So maybe that has kind of something to do with it there. But Microsoft is supposed to be one of the most immune out of all the Mag 7 from the tariff hit. So do with that what you will. Last month for Alphabet or Google, 12%. Okay, year to date, it's down 13% still year to date. For last year, down just slightly, about 2%. Last 5 years, up 137%. Okay, so far, pretty much for all of the Mag 7, they're doing pretty good. I mean, all of them rebounded from the lows from a month ago. Okay, and for the last year, 5 years, they're still doing pretty good. So I mean, it still seems like this is probably a good investment option. And if you took advantage of that dip, you had some pretty good gains on any additional money that you put into that dip that happened back in early April. It's definitely rebounded for you here and is looking, pretty good for anyone who took advantage of that. Let's look at some ETFs. So we got Vanguard Total Stock Market Index. Last month, it's up 12%. Year to date, down 4%. Last year, up 8%. And last 5 years, it's up 88%. So still doing pretty good for a total stock market index. Okay. Still doing pretty good overall and definitely rebounded from the lows from Liberation Day. Okay. The Vanguard Growth Index ETF up 16% year to date. We're down about 6%. The last year, up 13%. In the last 5 years, it's up 109%. Okay. So that growth index ETF still doing pretty good all in all. Definitely rebounded from those lows that happened last month and is sitting kind of pretty here. Okay. Vanguard S&P 500 fund. All right. So the S&P 500, let's see how that's doing. Last month, up 12%. So that's rebounded. Year to date, down 4%. Last year, up 9%. Last 5 years, it is up 93%. So over the last 5 years, still doing really well. Last year, still doing okay. Year to date is down a little bit still, but all in all, not too bad. Now, one thing of interest to note for the S&P 500 is that it did have a period of 9 straight days of positive gains, which is the first time that's happened in over, I think, 20 years. Okay. Oh, it's right here. Okay. Right. S&P 500 snaps its longest winning streak in 20 years is right here. So just today, it was down slightly today. As you can see here, it was down about 0.6% here today. But it had like 9 straight days of positive gains, which hasn't happened in apparently 20 years. Okay. So, I mean, you're getting some signs of some good news from the stock market, even though a lot of people are still out there parroting that we're doomed. Tariffs are going to do us in. Don't always buy into all the noise. Okay, that's all I can say. Vanguard S&P 500 Growth Index Fund up 16% for the last month. Year to date, we're down 4%. Last year, up 15%. Last 5 years, up 102%. Okay, so I mean, yeah, today was a down day, and the numbers are still looking pretty good. Okay, so last month, these things have really rebounded quite a bit. And I think we're looking in pretty good shape here. So let's look at some of the non-Mag 7, big ETFs. Let's look at maybe some other companies like commercial consumer staples. Nike, we got Nike here. So last month, they're actually up 3% in the last month. So they rebounded from those lows. Down for year to date, though, 24%. The last year, it's down 39% still. Okay. And for 5 years, it's down 37%. So Nike is having some other issues besides just tariffs, right? It's been having some serious issues the last few years. They got themselves into some hot water with some political ads and stuff like that they were kind of doing. So yeah, they got other issues besides just the tariffs, right? So that's why their stock has been kind of plummeting. Will they rebound? I don't know. That's a good question. I mean, it could be worth a little bit of a gamble if you're a gambling person, or if you want to try to go with something a little more sure, then maybe one of these other items that we've looked at already that are, kind of pretty certain going to go back up or roll. But yeah, could be worth a little bit of a gamble there. Got hit pretty hard, but it's up 5% now on the month. Okay. Year to date, down 27% still. Last year, 20%. And in the last 5 years, it's up 17% still in the last 5 years. Okay. So again, not nearly as big growth in the last 5 years as some of the Mag 7 and some of these ETFs here, right? Still, all in all, doing okay for Lululemon. Apparel companies are always hard. Consumer staples, that kind of stuff is always hard, right? Because it's, low margins and things of that nature. And so, sometimes it's hard to get massive growth with those. Taiwan Semiconductor Manufacturing. So just because they're building a massive plant here in Arizona, I decided to take a look at them. Why not? They're up 21% on the last month. Year to date, down 11% still year to date. Last year, up 23%. And in the last 5 years, they're up 233% in the last 5 years. Okay, so moral of the story, if you haven't figured it out from all these that we looked at, every single one of these stocks we looked at are up for the last month. Okay. That you had all these people out there saying, oh my gosh, the world is ending. Stock market is going to crash. We're going to have Jim Cramer from CNBC was like, we're going to have another Black Monday where the market's down 20 or 30% in one day. None of that happened. All right. There's excuses as to why it didn't happen, that they backed off the tariffs and this, that, blah, blah, blah. It did the extension or the pause, whatever. Okay. Sure. At the end of the day, the market was always going to go back up. The only question was a matter of timing. All right, in this particular case, it shot back up pretty quickly. And if you didn't take actions quickly, then you probably missed out on some of the dip where you had opportunity to buy at some pretty low prices compared to recent highs. That said, a lot of stocks are still below the recent highs. I mean, just look at some of these that are down still year to date. So you still have an opportunity to get into some. But again, as with everything, right? You hardly ever want to. I would never say never, but you hardly ever want to go all in at one time. So let's say you got like 5,000 to put in. You don't want to put 5,000 in all in one day. All right. You want to do it over maybe 4 weeks, 8 weeks, 12 weeks, something like that. Okay. Do like a certain amount per week, or do a certain amount every month, something like that, right? Do some dollar cost averaging into the market if you have some more money you want to put in, and into this uncertainty. There's still a lot of uncertainty, right? Let's not get that mixed up. There's still a lot of uncertainty as to what's going to go on. Nobody knows for sure if the market will dip back down or not. All right. A lot of people are saying it's likely going to dip back down at some point. And if that's the case, be ready to rock and roll. Because if it dips down again, I have a feeling the next time it rebounds, it's just going to continue to go up and shoot up. And we probably won't see those figures again unless there's something more drastic wrong with the stock. It won't be from the external forces of the stock market or the tariffs and what's going on in the Trump administration. Okay. So yeah, I think, we're in decent shape right now. The market's definitely rebounded, as you can see from some of these numbers. And, hopefully people didn't go too crazy and start selling a lot of stuff and get hurt in the end, because they were definitely trying to scare you into doing that. There's no ifs, ands, or buts about it. I did see some interesting data, though, that retail investors have added more money to the market during this last downturn and dip than institutional investors, which is kind of interesting. Let me clarify that. I don't know if it's more, I think it's not dollar figure, but I think in terms of like the number of people that are kind of putting money in, I think they've kind of added a lot more, which is good data. It may be dollar figure too. I'm going off of memory here, but I did read something about that a couple weeks ago, and that's pretty good data to suggest that retail investors are starting to maybe get a little bit of a hint and start to take some action and get into this market during this downturn. So anyways, so that was kind of just a quick update on everything. Hopefully this was helpful to you. You can kind of see a little bit of an update on where things were from a month ago when everything kind of started to hit the fan. And, hopefully you took advantage of it. Because even if the market dips back down again, chances are it might only go down to where it was during the last dip. So you're still in a good position, right, in the end. But there's always a possibility it won't dip back down and just keep going up. And so hopefully you were able to take advantage of that and you're successful. So any questions or anything like that, feel free to leave a comment, shoot us an email or give us a call. We'll do our best to try to answer. And if we can, I mean, some questions we can't answer because you're not a client. So we have to be careful on some of that stuff, but some things we can. And so feel free to, give us a call or comment, and we'll do our best to engage with you and get your thoughts. So thanks everybody for tuning in. This has been another episode of the Ignite Business Talks podcast, a live edition. And new shirts, by the way. Yeah, if you haven't seen this shirt yet, self-directed retirement. So self-directing, on a little side note before I end, sorry. So self-directing retirement is a cool thing. If you are super uncertain about the stock market, you don't want to be in the stock market anymore, or you want to limit your exposure to the stock market and you want to do some alternative investing like real estate, private equity, crowdfunding, etc. Okay. There's ways you can do it with your retirement accounts if that's where a lot of your investments are at right now. There's ways you can do it with your retirement accounts and still keep them inside the retirement account without having to pull the money out and take some tax hits and penalties and stuff like that from doing that. And so I encourage you to at least talk to someone who understands self-directing your retirement, like IRAs, 401ks, etc. Okay. There's a lot of accounts that we can self-direct before you pull the money out and take any sort of penalties or have a tax hit from doing that, because there's ways to avoid all that and still be able to invest in what you want to invest in and not just invest in the stock market. So that's the last little thing that I'll say before we end this video today. But we'll do more info on that in future videos. And so thanks for tuning in. Hopefully this was helpful, and I'll talk to you guys later. Have a good one. Bye.
This presentation is intended to be educational only and does not constitute a CPA or financial advisor-client relationship. It is always in your best interest to consult a competent legal financial advisor and/or tax professional when conducting your own personal transactions. Furthermore, it's important to do your own research when necessary to verify tax law when there's a lack of concrete guidance or gray areas of conversation.